We will start this video with weekly time frame, and last week gold breakout this upper trendline zone and it is confirmed by closing of weekly candle. First, this lower trendline zone is our support. After this breakout, first target will be 61% retracement of this complete bearish trend from all-time high to 1677 at 1923. If price reach there 1923 61% retracement, then this can be a possible flat correction. If this is a real all-time high and bear market for gold has been started, then at 61% retracement on flat correction, this buyer will take profit and new seller will sell gold, because new lower low will test this horizontal support and will send gold up to 1500. After this breakout, 1923 is your horizontal resistance and your chart pattern is ABC flat correction. If we go to daily time frame, then same thing on this time frame, the candle breaking and closing outside this trend line zone. On this daily time frame, first resistance will be 1877, which is 50% retracement from all time high to this bottom, and our target will be 1923 61% retracement. After this breakout on daily and weekly time frame, gold is bullish. For intraday trading, when we go to H4 time frame, first our major support is this lower trendline zone, which has been tested multiple times. If retrace back, then you can take long entry again if you have missed this buying opportunity at support zone. If you focus only on H4 time frame, then you can see this chart pattern. First, this was impulsive wave after FOMC meeting, then sideways correction, and it has made this expanding triangle chart pattern A, B, C, D, E. And this chart pattern has been tested 3 times on upper trend line and lower trend line, and this is impulsive wave. We can name it W, X, Y, and this one is wave Y, the impulsive wave. When you draw wave extension tool for wave Y compared to wave W, then you can see first it make a intraday top at 100% projection at 1841, then it make a intraday top at 1864, the 38% projection for wave Y compared to wave W. For intraday on H4 time frame, our resistance is 1864. If that resistance break, then next target will be 1879 and retest of previous resistance zone. If we go to H1 time frame to get more clear picture for intraday trading, then this is the wave count for this intraday trend started from 1780 and making top at 1865. First, it is wave 1, wave 2, which makes sideways correction, flat correction. Then wave 3rd subdivided into 1, 2, 3, 4, 5 wave, which made a parallel channel, and 4th wave which makes support at lower trend line of channel and near 4th wave of previous degree. Then this is final wave, 5th wave. If you draw fixed extension tool for wave 3 and 5 combined, then you can see the both wave 5 and 3 combined are making 2.61 projection in compared to wave 1. First they made intraday top at 61% projection. It made double top on 15-minute time frame, and now it is making top again at 2.61 projection. After last week's CPI data, there is a rumor that Fed can increase rate in emergency meeting, and this has changed market psychology for everyone, and now everyone, Fed and investor, are in panic mode. If that happen, if they raise interest rate before March FOMC meeting, and these people who made this flat sideways correction, who were buying gold below 1800, have that insider information. These people know exact date when they will raise interest rate in emergency before next FOMC meeting. If you compare weekly time frame with H1 time frame, this is your trend line breakout. Previous high is their first target for bulls who are taking entry along this rising trend line zone. For a intraday trading, you can take entry based on this Elliott wave count for H1 time frame. If this is a valid top, then wait for retracement, because after making bottom near 1788, it gave only one big retracement opportunity. Since then, it did not make any big retracement. If retracement start from this top, then your first support will be this lower trend line zone. This retracement can again retest this lower trend line, then continue its bullish trend up to 1923. Or if we make top at this 2.61 projection, then it retracement can break this lower trend line, and you can start selling on retest of this lower trend line. Our first retracement target and horizontal support is 1822. Before that, there is no support on H1 time frame. If price retrace back up to 1822, then you can buy again with TP up to 1842. Then second TP 1923. So 1822 is your horizontal support, and this white trend line is your dynamic support. This was our trade plan which we shared on TradingView on 28 January, and we explained how to take entry on this trend line zone, and our first TP was 1817. Then we shared this trend line on daily time frame, so you can take entry on intraday. Then on 15-minute time frame, we again shared this trade plan on line chart, and this is candlestick chart. We expected a big retracement, but it did not make a retracement up to 30 or 50%, so we missed a buying opportunity. So this one is your new updated Elliott wave count for H1 time frame. Last week, one more new thing happened. US believe Russia can invade Ukraine this week, and if this happen, then all of these buyer who were buying gold below 1800 have that insider information. If you have experience of demonetization in India in 2016, then you can take this example. Almost same thing can happen with dollar, because if dollar goes to zero, then gold will go up. That is why these people are buying gold, and there is a rumor then these are Russian central bank. If we talk about war between Russia and Ukraine, then whole world is running on system which was created after World War II, which made dollar a reserve currency. After World War II, on new created system, dollar was backed by gold. Now it is backed by gun and tank. If you have more war machine than USA, then you can make value of all the dollar to zero. If World War II brings socialism, then Berlin Wall in 1922 bring globalization. Since 1922, there is no big change in global financial market and the system which run this world. If every country start fighting again and something big like Berlin Wall happen again after Russia-Ukraine war, then gold will not stop until everything goes back to normal.